Now, without further ado, I think it's time to introduce our first panelist, our first speaker, sorry. And it's obviously the Chief Economist, Daniel Knapp, who will talk us through the connected TV landscape in Europe. So Daniel, over to you.
Thank you very much, Ryan, and warm welcome from me as well. I'm going to share with you some introductory remarks on the CTV landscape as it emerges in Europe. Those who follow my presentations know that I like to show lots of statistics, not necessarily on audience consumption, but on the revenue and the spend side of things. And despite CTV being a narrative around the globe, firmly established in the SEC filings of key ad tech firms and so forth, we actually have a fairly limited data landscape in Europe, not least because the CTV environment is, number one, very fragmented, and there is a plethora of definitions. What CTV is? Is it addressable TV, smart TV, or is it something else? And the panel will dive further into that. However, I'll provide some statistics that hopefully contextualize what the landscape that we're in looks like to provide further fuel for the panel. I think it's important to note that we are just coming out of a severe reset of the digital advertising market or the ad market overall. In 2020, those who've seen our AdX Benchmark 2020 results, we saw a better than expected performance of digital advertising of 6.3% in 2020. After a slower start into the first quarter of 2021, we're actually witnessing a continued acceleration of ad spend, not just in digital, but across the board. Notably also important for our session here in linear CTV. Massive price inflation, which we expect is going to continue actually for the next 2 or 3 years, which means that linear television also is going to perform better than initially expected. But let's focus back on digital advertising. We are expecting now that digital advertising in Europe is going to grow by 28.6% in 2021, which is going to be the fastest growth since 2008. So a massive acceleration. And indeed, it is, apart from classifieds, all formats which are going to enjoy this growth. If we look at 2020, the blue bars here, we can see a fairly disparate landscape of growth in 2020, which was owed to the fact that you had more performance-based, switch on, switch off media. Brand advertising was lowered during the first half of the year before it came back. However, in 2021, we see key formats from social, video to audio growing 40% and more, and even search, which some had already written off in 2020, is going to grow by around 30%. Video here includes in-stream video, out-stream video, and in-feed video, and it also includes CTV. That could be smart TV, or it could be addressable TV. However, the national IRBs that are contributing data define it. So do take this data with a little grain of salt, as it's not complete yet. However, we're working on establishing a spend measurement framework for CTV, which also ensures that we have comparable apples to apples definitions in Europe. I showed this slide during our last session on CTV in April. However, you will see some new logos on this slide. And we somehow have the fortunate circumstance that whenever our virtual CTV day launches, on the day before or on the very day, an acquisition or some other major news is taking place. And just this morning, when I checked my Twitter feed, there was an announcement of RTL and Amobi joining forces in continental Europe in a tech alliance to really consolidate and bundle from sales and a tech perspective their addressable TV solutions. Meaning that we're seeing increased, I think this is a bellwether, that we're seeing not just on the national level, but also on the international level now in Europe, increased collaboration, which adds fuel to the development of CTV, which in comparison to the US has been lagging behind in most European countries. The shift to streaming services persists. We saw in 2020 globally a tipping point where OTT subscriptions outstripped pay TV. However, again, this is something that is skewed by the US. If we look at the European markets, we're actually seeing pay TV penetration continuing to grow. However, pay TV bundles tend to include OTT offerings as well. In the landscape of first-party data, the deprecation of third-party cookies, we're going to see a massive reallocation of marketing budgets, which will also benefit CTV. And with the benefit of CTV, there are also some adjacent sectors which are going to enjoy the growth. On this chart here, we can see the communications bucket, which includes paid media, but also PR, which is steady and static over time. But there's a reallocation towards digital. And all the other bits, experience, communication, commerce, and technology, is going to grow to as much as the paid media bit. However, these things are not separate directly from paid media, but they also fuel further growth and investment, in particular on the digital side of paid media. So a massive reallocation here of budgets towards retail media, new walled gardens that we're seeing, but also to the traditional walled gardens. However, also new addressable media like CTV and also tier 1 premium publishers. That also includes broadcasters, in particular at the interaction point with CTV. So macro changes in the digital landscape are fueling further development in CTV. Smart TV adoptions across European countries, and here are the big 5 in Europe, is going to continue. We are seeing by 2024, on average, around 0.5 smart TV devices per household. That even excludes set-top boxes and so forth. So there's really the TVs. And the UK here stands out, but also Germany catching up very quickly with 0.78 or 0.85 devices per household. So device penetration is strong. And we're also seeing that regulatory initiatives in key European markets, such as the digital switchover in Italy, or a less strict regulation on CTV advertising in France, allows advertisers to take advantage of this device landscape. But what about the CTV ad market size? That's a huge question, as it depends on the definition. Let me direct you to the right side of this slide first. We're seeing a global market in 2021 of around 18 billion euros of CTV ad spend, which is going to grow to 37 billion in 2025. The European proportion of that, according to our estimates, is fairly small. We expect the market to be around 1.3 billion. That includes various different types of connected TV advertising. It includes what broadcasters do, what hardware manufacturers do. It includes YouTube and so forth, all watched on the smart TV. If we try to break out this 1.3 billion across the markets that we cover in our ADEX study, which is 27 markets in Europe, not just the European Union, but also the UK, Russia, and so forth, we can see that the vast majority of the spend is currently allocated to the UK, where nearly 70% of all CTV ad spend is, followed by Germany and France, Italy, Netherlands, and Spain. But it means that there is a huge disparity already in the maturity of these markets, and there's significant headroom for markets to grow. However, as I said, it depends on the definition, because in some markets, like Germany, like Spain in particular, with very strong reliance on HbbTV and broader addressable solutions, which kind of muddies the water. And it really depends on the national market and depends on your perspective on the CTV market, whether those figures should be included in the definition of CTV. Let me go to programmatic advertising, which is increasingly becoming a pervasive enablement infrastructure for digital advertising. Overall, programmatic advertising in 2020 grew by 8.3% to 8 billion euros. And that excludes the broader concept of automation, i.e. closed walled garden, self-serve platforms on social media. So we are in an 8 billion market right now, into which CTV is very slowly moving, and we're expecting it to fuel that market in the future. So over half of display spend, banner, video, and so forth, is now programmatic. So Europe is a programmatic first market. Remarkably, whereas programmatic initially was really random inventory and display, we're seeing video overall, that includes all video, as a key growth driver of programmatic, where 5.2 billion out of these 8 billion are now being allocated to video spend. Again, illustrating that brand quality environments are actually being served by programmatic infrastructures. If we look at our attitudes to programmatic survey, which we recently launched, where we surveyed 300 different market participants across Europe, from media buyers, from advertisers, ad tech firms, and publishers, we can see that when we ask for what is the key programmatic growth area in your mind, that connected television ranks the highest among all of the constituents here. Higher than audio, higher than digital out of home, and higher also than separately here, the OTT segment. However, it's quite notable that advertisers, agencies, and publishers have a fairly consensual view on CTV in terms of its importance, but ad tech vendors really skew the picture here, with nearly 80% seeing this as the highest ranked one, which I think is a very interesting development, in particular when we look at the kind of disparity between the initiatives that ad tech companies are deploying, what's happening in the US, what's really happening on the ground, for instance, on the broadcaster level, but also on the kind of agency level in Europe. So it would be interesting also to discuss in our panel why these different views persist and how they can be aligned further. Overall, the programmatic landscape is consolidating, and this will be further accelerated by the deployment of programmatic on CTV. We are already seeing that buyers are reducing the number of DSPs they're using concurrently. This has been a downward trend over time. And more we are moving towards one-to-one relations, away from this kind of open market of, in a sense, global trade, and more towards individual trade agreements, if you will. Overall, we can see that with the end of third-party cookies, with the rise of walled gardens, we're seeing a fragmentation of the overall internet into several different internets: the Google, the Apple, the Facebook, the Amazon internet, challenger gardens, and so forth. And CTV emerges here as a new walled, or at least hedged gardens, because very different players are more open, less open. They're very different approaches. For instance, Planet V on ITV, and what other players, in particular, for instance, hardware manufacturers, are offering. So we're going to see not just one CTV walled garden as a part of this many internets, but potentially further fragmentation. This is going to be a key challenge. How can CTV really replicate one of the core assets that television has, which is its broad quality reach? So fragmentation, not just on a national level between countries, but also within countries and within different types of inventory. However, with the alliances we're currently seeing, there's also potentially a move to what I would call a Europe Inc., i.e. a closer collaboration between market participants to remove these barriers and to recreate that scale and to fortify the position in particular of endemic players in the market. And with that, I would like to thank you very much for your attention of this whistle-stop tour, and I'm going to pass back to Ryan to introduce our panel.